que roncan, pero no pueden con mi pum pum, con mi pum pum. Y si hay alguien que me rompa, porque no pueden con mi pum pum.
Karol G's cooking.
Con mi pum pum. Por encima se me nota que me sobra el piquete.
I'm on the tube. I'm looking at Karol G. She got billions of views on these videos. Billions.
También tengo una jipeta. La tengo fulete con Tommy Shari. Te amo el miedo en la cabeza.
Gentlemen, ready?
Cuida con lo que sube para la
Cook up the
story.
markets a bit,
Y
huh?
adivina quién viene por ahí. Viene Juana, viene Mari. Todas las baby quieren party.
We gotta warm up with some Karol G, baby.
Y te vamos a romper, yeah, 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 yeah.
Wait, here we go.
Salgo así, cala. Le pido a tope. Que puede ser que con el culo no te tope. Me siento bichota sin salir del bloque. No me quieren partir, no tienen con qué. Ronca, pero no pueden con mi pum pum, con mi pum pum. Y si hay alguien que me rompa, porque no pueden con mi pum pum, con mi pum pum, con mi pum pum.
Another gentleman loving this. Right before the charts.
Con mi pum pum. Y si hay alguien que me rompa, porque no pueden con mi pum pum, con mi pum pum, con mi pum pum. Perreando duro, le gusta mi culo. Hace tiempo te estoy esperando. No sé tú, pero yo aquí pensando. No sé nada para lo que te roncando. Tú pa' darme like en el interés.
We got 1 minute, gentlemen. 1 minute.
Por más que me tire, no cojo lucha. La que me fronteó de aquí no se escucha. Salgo así, cala.
I know the people on X are thinking, I thought this was a stream about crypto. It will be. Give it a minute.
No me quieren partir y no tienen con qué. Roncan, pero no pueden con mi pum pum, con mi pum pum. Y si hay alguien que me rompa, porque no pueden con mi pum pum, con mi pum pum, con mi pum pum. Roncan.
All right, gentlemen, 11:30. Let's get into it. All right, give you a little Karol G to warm up the day. Get this off. I don't need the headies anymore. All right, so what happened? Since Monday, we had the FOMC meeting. We talked about on Monday, what are the chances of a rate cut? What are they going to do? What are the numbers coming in at, etc. Great meeting, okay? Jerome Powell comes in, lets everybody know, hey, listen, we're relaxed, we're chill, we're positioned comfortably so that if we do have to take monetary action, we can take that action. And if we don't have to, we won't take that action. Okay? Good. He's telling everybody we're good, we're fine. Inflation's down. Jobless claims are steady. There aren't a lot of people getting laid off, not a lot of new people getting hired though, but it's what's it called? Balanced, right? Nothing's broken, nothing's shown to be broken. But what was the huge takeaway from that meeting that you should have noticed? Okay, so there was a big point he made that is a change in monetary policy that will positively impact the markets. Anybody put it in the chat. Put it in the chat. Do you remember what that was? Did you guys watch it? Or are you just coming here and saying, you just tell me, what should I do, Priyama? Which you might. That's just fine. I'll give you the answer. But did anybody pay attention? Did anybody hear what he said on that meeting yesterday that's going to be substantial for risk assets moving forward? Anybody? They're cutting QT in half. Okay? So they're going to slow quantitative tightening in half. They're going to cut it in half, how much they're actually offloading on their books, right? Big deal. Why? Because previously, every single month for however long they've been doing this QT, there's been $55 billion in negative sell pressure every single month, okay? So net liquidity was down $55 billion every single month for the past couple years. They're going to cut that in half. Okay, why is that important? Well, that's a net positive for liquidity. Yes, are they going to still continue to tighten? Sure, but at half the speed. So it's not going to be 55 billion, it'll be 27.5. So it's a big deal because that's now liquidity that's staying in the markets. They're slowing their tightening process. Okay, That means they're gearing up to start switching back towards what? QE. Okay, that's the goal, is to get back to QE. When they get back to QE, that's when you're going to see risk assets start really ripping. You're going to see M2, global liquidity, really start to pump. The US M2 as well, which is good for risk assets, which is good for markets because there's more liquidity in these markets. Okay, so that was a big point that Jerome made. So they're cutting QT in half. Okay, they did not cut rates. Okay, they did not cut rates this meeting, which was as expected. Okay, good, right? Remember, we don't want anything out of the ordinary to happen. Rates were not priced in. A rate cut was not priced in. We did not get one. That's good. Next meeting is on May. Let's look at the chart. Hold on. Where are we at? FOMC. Where's it at? Where's it at? Bomba Cloud. I had the fucking Fed Watch tool. FOMC Fed Watch tool. The next meeting's in May. Let me pull it up real quick. CME. Yeah, here it is. There it is. Next meeting is May 7th. Okay. So I'm going to pull up the rates for you guys real quick. Let's do probabilities. Look at this. See? Already pumping. Hold on. Let me show you the guys what I'm looking at. All right. So QT is getting cut in half. Bullish. They're stopping the offloading of the government assets, the government book. Okay. So now let's look at the probabilities compared to what they were on Monday. So we had on so the meeting was on Wednesday. We did not cut. Now, so we're still at current target rate is 42545, right? So there's an 85% chance that we're going to stay at this for the May 7th meeting, right? So if we go to probabilities, so May 7th probability 85% that we stay the same, okay? This is going to change quickly. So you're going to see this 4 to 425 basis points, this number start to pump up. Ideally, if we get a cut in May, we're looking good. If it's not in May, for sure, we're getting a cut on June 18th. For sure. It's already 62.5% that they're going to cut in May. Or excuse me, June. June 18th meeting. Okay? That's what we're looking for. We want to see these numbers continue to go up. The lower that those interest rates come, the more bullish for risk assets we are. Plus the fact that they're cutting QT in half, again, it gives me more confidence that the rest of this year, mid to end of year, is going to be very bullish because they're going to try to inject liquidity back into markets, plus make capital cheaper to borrow. Inherently bullish for what? Low cap stocks. The IWM, which we need to pump, go into price discovery so we can get our alt season. We've talked about this before, right? So this is looking good. Everything's looking good. Now, that's why we got that pump coming out of the FOMC meeting. So now we're retracing the pump right now, but that's fine. That means the market's bullish. People are excited. Good news at the FOMC. Okay. So everything went as planned yesterday. Plus, a little added bonus is the QT getting cut in half. Okay. So we want that liquidity to stay in markets from the US government. So if we take a look at, let's look at the actual charts now. So FOMC meeting was good. Take that. And then let me do screen capture. We'll change it over to Bomba Cloud. Why does it do that? Fucking outrageous, dude. Just fucking stupid. Okay. All right, you should be able to see it now. So what does that do for macro? Because we gotta look at macro FOMCs for macro. Okay. Look at what happened here. We were talking about this. Look at this. We've had this drawn out. We called this move perfectly. Okay. So you see what's happening now in equity markets. So we get this big drawdown on the S&P, right? This is going to be the major barometer for whether or not markets are bullish or bearish. Okay. So from all-time high to the very low, we had a 10% pullback, 10% correction, okay? FOMC meeting happens. That's going to be on the 19th. Or is that? Yeah, 18th we come here, and then 19th, past 2 days we're green, okay? We called this demand zone getting tagged perfectly. We figured, okay, if we're going to draw down, we lose this local demand, which we did. As soon as you lose it, you see how it's just a waterfall. So you lose this demand zone, you come all the way back down, and you retest this major demand right here, okay? Tagged it perfectly. Now we're getting a bounce. So here's what we're looking for. Are we going to get a retest and basically consolidate down here a little bit before we reclaim this demand? Or do we actually just come back up into here, reject, and then reclaim before we break to new all-time highs? Okay. The latter is going to be a quicker move, meaning it's going to happen within the next couple of weeks. The former would be if we consolidate down here, a couple months of ranging before we make another break for all-time highs. That's what we're looking for. Okay. Now, either way, it's huge that we held this demand. We can't roll over here. We got to press back up and break through this demand zone up here. Get back into this range. Okay, get back into this range up here. Change the color on this. Whoops. Right, get back up into this range and start pushing for all-time highs again, okay? So we need to see this get reclaimed, this demand zone right here. So this is going to be right about 5,700 to 5,850, this range right here. So this right now is we got to change this. This is going to be supply, okay? So this is supply now. Got it? All right, so we got to eat through this supply, but it's good we got this bounce right off the demand, just how we were talking, okay? So macro, we got the bounce we needed on equities. Okay, now we got to keep pushing, not roll over. We do not want to see this. You hit this supply, come back down, break down, boom. If you see this, it's over, cooked. Okay, recession going into a bear market. All right, so that's S&P. Let's take a look at DXY. So that's gonna be this one. Okay, look what happened. See, called it again perfectly. So we said originally when we had this drawn out, this was in green because this was demand, okay, because we were up here, right? We tagged this demand, came up, got a relief bounce, right? Came back down, and look at this waterfall. Waterfall, break through the demand, turns into supply. We came back to this local demand zone. Again, tagged it perfectly, right? So this thing is respecting the TA. We come back, and look, we're consolidating right now, literally right at this demand zone. So what we want to see here, as long as we can't get a push back up into supply and start reclaiming, as long as we can keep consolidating down here and eventually lose this, this is a tiny piece of support right here. This could break down very easily. We see this breakdown on the DXY. Look, you're getting this move, another waterfall, nice waterfall all the way back into this demand zone, okay? Beautiful. All the macro, again, continuing to show me that we're loading up for a bullish rest of the year because all these are bullish macro indicators, okay? So the DXY is starting to break down, and the other one, 10-year yield, right? We've been talking about. Look at this drawing, see? It's playing out how we were talking. I drew this from before, said we got this bounce off the demand, right? We broke down, came down to the demand, bounced up. This is like a complacency shoulder right here, right? So head and shoulders, shoulder, head, shoulder. What do you get whenever you get a head and shoulders? That's a topping signal. That's a topping pattern. Okay, you get the shoulder, you get the head, which is the pico top. Then you get this shoulder to come down here, right? So the shoulder is like the rollover, the complacency shoulder. And then once you come down from this complacency shoulder, that's whenever you see this nuke, right? So you're going to see this starting to do it right now, which is beautiful, beautiful. Everything that we want to happen right now is happening. So you're getting this complacency shoulder, and you're getting this red. So I had drawn it from here, but you see it coming. Red into the demand. Now we just need to lose this demand. Maybe we get a little local bounce from this liquidity, this little area right here, but it should be small if it does happen. You're coming all the way back down to this demand down here. Okay. So we need this to turn into supply overhead. Okay. But right now it's still demand because we're holding. Okay. So macro, beautiful. And that FOMC meeting should have been very encouraging for everybody. Oh, another thing I'll mention with the FOMC meeting, if you guys didn't watch it, Powell kept getting a lot of questions about the tariffs and how the tariffs were going to, basically impact the economy, because that was causing a lot of sell pressure and a lot of downward pressure on markets. Was Trump was announcing these tariffs on Canada, on Mexico, on China, and the market was throwing a fit. Oh, sell off. Oh my gosh, this is bearish, because they thought it was going to increase inflation, right? So they kept asking him, they're saying, Jerome, how do you track the inflation from tariffs? How is it causing inflation? Is it causing inflation? If it is at all, what's going on with it? And again, bullish, the way I took it was, I got a question here. Can you explain how you're looking at that supply and why you think it is in that 105 to 106 range on S&P? Yeah, I'll jump on that in a second. So, wait. Why think it is in that 105 to 106 range on the S&P? 105 to 106 range, where's that? 105 to 106 range. I'm not seeing that on here. Are you talking about DXY? Because 105 to 106 would be DXY right here. Anyways, point I was making with the tariffs. Jerome was clearly saying basically, do tariffs cause inflation? They kind of have to, but they're not really, right? Which is bullish. Basically, he's saying, tariffs aren't really causing that much inflation or as much as we thought it would. Fantastic, right? This is not a political thing. People just assume because, it's Trump. Trump has to be wrong about everything if you disagree with him, etc. So tariffs are dumb, tariffs are stupid. Clearly not. Tariffs are working. It's not causing as much inflation as they thought it would, okay? The second thing is inflation's actually coming down. So the last CPI print, right, came in cool. Inflation came in cool this last print, lower than expected. Inflation's continuing to come down. The prices of things are literally coming down as we speak. You can literally look at the consumer economic data. Everybody, we were joking on Monday, everybody's talking about the price of eggs coming down. Oh my goodness, it's coming down. Cool. Yeah, it's coming down. Inflation's coming down. Now, who gives a fuck about what the price of eggs is? But for markets, the fact that inflation's coming down is bullish. For investors, that gets them excited. So inflation's coming down regardless of the tariffs being there. Huge, okay? Again, another piece of confidence for investors moving down the road that now we know, okay, tariffs are in place. Tariffs are going to start having their effect. Let's continue to see what their effect is over a long enough time frame. But clearly, it's not causing this massive inflation that people were complaining about or people were afraid about. Huge, because now we can start to get risk on and excited again about the markets, so people start dumping their capital back in, okay? So Jerome, he literally could not say that tariffs were bad. He basically said, they have to have an effect because that would make sense, but not enough to where it's impacting our numbers. They also asked him about all the layoffs at the government and how that would affect jobless claims and unemployment. He said, yeah, it's a lot of people, but not enough to affect the data macro across the country. Boom, huge. Again, beautiful. So basically he's saying the things that the new administration are doing aren't really hurting economic data, at least yet, if it is going to at all. So that's big. Because, again, it's going to give confidence to investors, again, that tariffs aren't going to destroy the economy, which clearly I didn't believe they would in the first place, but people were afraid of that and the inflation it would cause. It's fine. Okay? So, beautiful. All right, so on DXY, why are we calling it supply? Can you explain how you're looking at that supply and why you think it is in the 105 to 106? Yeah. So, if you zoom out a little bit, it's supply because whenever we've come into this level before, we've had a lot of interaction with this price range, right? So the reason it's supply now is because we're down below it. So if we come back from underneath and retest the supply, that means that there was more supply overhead, which caused the price to come down. So if there's more supply than there is demand, the price comes down, correct? Because it has to match. So in the past, this is where we topped out at, right? We came into this supply, All right, now there's too much supply, not enough demand, so price is going to come down. So you see the price come down. Then we retest this supply region. Same thing again, too much supply, not enough demand. Well, that means the price is going to come down. And so then we nuked hard. Now, the reason we call this demand down here, because it's down below our current price, is because, okay, when DXY came into this region, again, there was more demand than there was supply. Well, if the demand is higher than supply, what happens to price? It goes up, right? So then you see the price moving up. Okay, same thing again. Why is this a good supply region? Because you see there's a lot of interaction with this region. So finally, we broke through the supply. So there's enough demand to break through. And then you come back and you retest it, right? Boom, and we went up. So technically, if you didn't see that breakdown and we were just trading up in here, this would now be demand once you break through it, right? Once you break through it and come back and retest it, it's now demand because the price is moving up. So there was more demand than there was supply. Okay, so it was a good demand zone. Make sense? But now that we've broken down through it again, that means there was more supply than there was demand. The price went down, so now that's a supply region. Okay, and this is our demand because this is where we're holding. So if we hold here, that means demand is meeting supply, so it's holding. There's enough demand here to keep the price stable. Okay, so we want to see the demand go down, the supply go up, and therefore a nuke back down into here. This will be our next demand zone. This will then turn into overhead supply. This will turn into overhead supply once we break down, and we're down in here. Okay, because then we would have to eat through the supply again to get up higher, right? All right, so that should answer the question. Cool. So tariffs aren't breaking the economy, so that's good. DXY is coming down, bullish. It's hitting all of our levels beautifully. Okay, we talked about the S&P. All right, last one we're going to talk about real quick is going to be VIX. The VIX. Again, how many times have we been talking about this? It makes sense. I was making because that 103 would then become supply if we drop lower. Exactly. Perfect. Beautiful. Okay, this is the VIX volatility index on the. Let's do this. Hold on. Let me add the S&P down below. Okay, let's look at this. Okay, so here's how the VIX can give you signal on price action. Let's do this on the weekly. Now let's do more data. We'll do 2-day. Oops. Okay, I want to show you guys how this chart works on the VIX. Okay, so VIX is a very important macro indicator as well. This basically shows you what level of fear is in the market, why price is moving down, what's going on. The VIX is the volatility index on the S&P. So let's show you how it's correlated. So whenever the VIX gets crushed, meaning that the VIX, the volatility is very low, it's down in these regions, right? That means that investors aren't afraid. There's not a lot of volatility. There's not a lot of downside. When the volatility index is crushed, you want the VIX to get crushed. That's whenever you see price float up on equities. When you see the VIX have these blow-off moves, right? These blow-off moves, that signals downside in equities, okay? So, for example, this one was in August 5th of 2024, which is whenever we had that huge nuke on August 5th. Look at that. Huge August 5th. That's whenever crypto nuked, equities nuked, everything nuked because the Bank of Japan liquidated themselves. Look at how the VIX spiked hard. See? Came all the way up here. If you look at COVID, right? Let's look at COVID. You can see where COVID's at, pretty obviously. Look at how high it fucking spiked. This was the August 5th nuke. Look at how it's down in here. So it came right there. How was that August 5th nuke? 65.65. Look at where COVID was. Huge nuke, right? So when you get this VIX to get these blow off tops, that's showing you that that's market volatility. Not good. We don't want that. That's going to be price getting nuked, okay? If you look at this, where the VIX had this huge blow off, right? Look at where the price of the S&P was at, right? At the same exact time, this is when the S&P bottoms. See that? Okay, so it gets bottomed. This thing blows off, this shit is nuking, okay? So the reason we're paying attention to this is because this is going to give a signal as to where we think equities is going to move next, right? So let's zoom back in. Okay. Zoom back in here. So we've had these spikes on the VIX the last couple months, and this is why you've seen equities and risk assets really draw down. Finally, we're getting this compression on the VIX again, okay? So we want to come back down into this demand region and really start to get crushed and stay crushed, okay? As you see here, so starting in February, we get this big move up all the way to 29, about 30 in March, and look what has happened to the S&P. It's the same thing. It's a correlation, right? Inverse correlation. So this VIX starts pumping, equities start nuking. Finally, the VIX starts getting crushed. Equities is starting to curl up. Okay. So this is constructive. We want to see this come all the way back down, retest our demand, and stay down here. Stay. We don't want more of these blow-offs. Okay. This was in December. This was basically our top for equities and our top for crypto risk assets. December. That's whenever we start drawing down, end of December. So once again, I'm showing you all these things because the macro data right now, okay, I'm talking all macro. What's going to happen for the rest of this year? Are we going into a bear market? Are we going into a bull market or staying in a bull market? Everything's showing me, okay, things are turning around. Things aren't broken. We've pretty much bottomed already, or at least very close to it. This is where you want to start bidding and accumulating assets and know what to accumulate. Because as the VIX continues to get crushed and you see the S&P start to march back up to all-time highs, that's when shit's going to start ripping face, okay? And so you want to benefit from the majority of that move. So as long as you see this VIX continue to get crushed, you're going to see the S&P continue to float higher. As long as we can get back into this range on the S&P, let's get it like right into here. Soon as this can march back up and reclaim this area right here, right back up into this range, it's game time, baby. So maybe something like this, and then reclaim. Now we're cooking, because then we're pushing back up higher. Okay. So I'm liking what I'm seeing. A lot of work to be done, but it's constructive, right? It's constructive. So the VIX is getting crushed as well. So we're looking good. Macro's all looking good. FOMC was looking good. We talked about bond yields. Let me see if there's any other questions. We're good there. And by the way, Logan should actually be coming to this stream. Oh yeah, here he is. Let's see what he said. Oh! All right, we'll see. He said him and Kamala and AOC are on a really long Zoom call right now. So he said he's going to try to jump on right after. I told you guys about it. Logan's very close with Kamala and AOC. He's actually helping AOC right now. Just make sure she doesn't get in trouble for showing illegals how to avoid law enforcement. So Logan's he's super passionate about that stuff. So he just wants to make sure she's okay. All right. But once he gets off of that Zoom call with those two, I'm sure he'll be able to jump on. All right. Let's see here. All right, Bitcoin. Bitcoin also looking constructive. Okay. Let's pull up BTC. Okay. So retracing some of the pump from the FOMC meeting. But if you look here, gentlemen, on a lower time frame, okay, on the lower time frames, we are finally starting to reverse trend to a degree. Though it is not a lot of data, it'll work. So as long as we get this, like something like this, there's your next higher low, higher high. Okay. Bitcoin's finally starting to make a trend reversal. Huge. Need to keep this going. Okay. Because as we start to reclaim levels, we're getting bulled up to the tits, right? Let me get all these out of here. So we're clearly creating an uptrend on the lower time frames. Okay. So we like that. Okay. We like that. Creating an uptrend. We're starting to try to reverse. If you put this on the daily, this is the other macro indicator we've been taking a look at, which is the global M2. Okay. Here's why I'm very bullish on this. Okay. Global M2 has been rising and has hit new all-time highs. Okay. Again, all the macro data to me is lining up and setting up for a fucking massive move later this year. That's just what I'm seeing. Okay. So as we talked about before, the M2 is the global liquidity index. Okay. So here it is. M2 global liquidity index. This is on the candles up top. This is at new all-time highs now. Okay. So global liquidity is at all-time highs. Well, what happens whenever liquidity in markets shoots up? So this range is sideways right here. And because Bitcoin and risk assets are lagged, this range is sideways. Bitcoin starts ranging sideways. Then you get this move up higher to new all-time highs. All of a sudden you see Bitcoin do the same thing. Okay, then we draw down. What does Bitcoin do? The same exact move. Draw down. Okay. Then you see this move back up to all-time highs. Well, we're going to be lagged, but you're going to see something like this. Okay. That's what I'm seeing right now. Liquidity is getting injected into markets. And I've heard this, and this is just, I don't agree with this, but US M2 supply is the most important. Because, of course, if the M2 in the U.S. is going up and the U.S. is stimulating economy, that's going to have the largest effect on our markets. Correct. But to think that other markets or other central banks, like the Bank of Japan, the EU, the Chinese bank, to think that them increasing their monetary supplies wouldn't have an effect on U.S. markets is just not true. Okay, that doesn't make sense. Yes, there is another crypto announcement from Trump today. Exactly, he's about to speak. That's not true. People are. I've seen people try to say that. Oh no, it doesn't matter. It matters only if the M2 for the U.S. goes up. Da, da, da. That's not true. China, Japanese, Taiwan, Singapore, Hong Kong, EU, people in the UK, everybody else across the world. If their monetary supplies are increasing, where do they go buy their risk assets? Where do these nations go and invest their money? Everybody's invested in U.S. equities. Everybody's buying U.S. companies. S&P. Everybody's buying Tesla. What's it called? Well, not everybody now. Hilarious. Goofies. Tesla, Amazon, Facebook, what's it called? Or Meta. Apple, Nvidia is not strictly US based, but my point is that all these other nations who are increasing their monetary supply, they're putting their money into US markets. So it does affect US markets. So to say that only the US M2 matters, only if the US is stimulating, that's gonna have an effect on risk assets is just not correct. That liquidity from other nations does make it into U.S. markets. Oh, also, guess what? Where's the largest crypto exchange in the entire world located? You ever heard of Binance? Right? So it's not just Americans or U.S. citizens that are investing into crypto, into US equities. No, nations across the world are doing that. They're all investing into these assets, and crypto is a global asset. It's not just Americans. So if M2 as a whole, global M2 is increasing, it's going to have an effect on crypto. Absolutely. Because that money will find its way into crypto markets. So when I'm seeing this global M2 reach new all-time highs, and we're seeing the US beginning to start stimulating, they're cutting QT in half. They're going to continue to cut interest rates. So now the M2 in the US is going to start to go down. To me, again, it just doesn't make sense that we're going to go into a recession right now. It's over, bear market. It just doesn't make sense. We have too many things in our back pocket at the Fed to stimulate the economy that it just wouldn't happen. It doesn't make sense. So again, I like what I'm seeing there. So we should see this next move up on Bitcoin coming in the next couple months. Okay. ETH. We basically called it could be the low. I'm pretty confident it's the low, but at the very least, we timed the low perfectly. We were talking about how end of the first week of March 9th, March 10th, we were going to get the low on ETH. We've been talking about it on stream. Those of you continue to show up. Oh, look at that. March 10th, low on ETH. Almost called it perfectly. Okay. So this is our major demand zone on ETH. Here's another reason why ETH is just makes sense from a, where's it? Percentage from the high. Let's do this one. No, let's do the other one. The reason ETH makes so much sense is because of this. No, I just did that one. Motherfuck. This one. Here we go. Let's do on the weekly. Okay, let's look at this. Here's why I'm not giving up on the ETH trade. Look at how discounted this is. Okay. Ethereum is a major L1. ETH right now is 60% off of its all-time highs. 60%. Okay. That's huge discount. That's more than half from its all-time highs. Okay. So whether you draw down, a little bit further down into 17, this region right here, between, what is that? Between like 1600, 1550, 1700, between that range, even if that happens, which I don't see that happening at this point, but even if you get that drawdown right in this major deep value demand area, come down a little bit further, you're getting generational entries on ETH. That's just my opinion. That's what I see right now, because this chart, to be 60% from its all-time highs, not only do you have so much room just to get back to all-time highs and make money off of ETH beta, just if it just touches all-time highs again, you also have the added advantage of the fact that, well, when it breaks new all-time highs, you're getting even more of a return. Okay, so ETH is not an asset that you're looking at and saying, oh, this is going to go to zero. No, certainly it's not going to go to zero. And if it's already drawn this much off of previous all-time highs, there's so much room for value, for reward on just even a move back to here or here, the all-time high, right? In my opinion, I still see ETH going to new all-time highs. But the risk to reward at this point to start bidding is there. It makes sense. Okay? It just does. Because even if you get a little bit more downside, okay, fine, you buy a little bit more down there. Or if you don't have any more capital, then you just get a little bit more drawdown, and then you move back up. Like the RR is going to be huge on this play. And you still haven't seen ETH BTC start to pump. You still haven't seen the IWM go into price discovery, which is whenever ETH goes into price discovery. This to me is just, it's such a no-brainer. The sentiment's terrible. People hate ETH. This, that. That's good. That's good. That's when I want to buy shit. I want to buy things when nobody cares about it. Nobody likes it. It's way down from the all-time highs. bunch of RR, bunch of opportunity to hit this move to the upside. I like this. Like, I see down 60% from all-time highs, and I'm thinking, oh, that's a fucking discount. Beautiful. The lowest I see it coming down is about 70%, 65% from all-time highs. Beautiful. Take it. I'll take that all fucking day. So that's the retracement from the all-time highs. This is a nice indicator. I like that. And here's the really interesting one. I'll show you guys. So this one's real interesting. We're also way down below all these ribbons on the M2 on the SMA. Okay, so we're way oversold. Check this one out. So this indicator, fire. Okay, look at this. So this is an indicator that shows basically, did you get what percentage return or what loss did you incur from FOMC meeting to the next FOMC meeting? Very interesting indicator. Tons of signal in this, okay? So you put it on the weekly, or we could even put it on the daily. Nah, let's do weekly. Okay. It's going to give you what happened after every FOMC meeting. So here's the meetings on the right-hand side. So from 129 to the current meeting, okay? We just had this one on March 19th, March 19th. If you take a look, what's been the return from meeting to meeting? So if we just look at it from this cycle, let's look at it from this cycle, okay? So we go to a bear market, okay? You get 3 in a row here. We're from FOMC meeting on the 1st of August to September 26th, you've had downside. Then from the 26th to November 7th, the next meeting, you had downside. And then from the 7th to the 19th of December, you had downside. Now, that was during a bear market, during a multi-year bear market. Fine. As soon as we come out of the bear market, okay, we start moving back up. You see 1, 2, 3, 4 in a row green. Okay, so I really wouldn't, I would not use these as signal because this is bear market. So I wouldn't, and this is barely any kind of return at all. If you look at it, it's here in 22 to 20. Yeah, silver is 22. Yeah, you're getting 4%, 1%, up in here, 3%, 5%. It's not a big difference. So I wouldn't use those. But let's say once we start coming out of this bear market reaccumulation, what does it look like? You get 4 in a row here positive, 2 red, 1, 2, 3, 4 in a row positive, 1 red, 1 green, 1 red, 3 in a row green again. Okay. Now you've had 2 in a row red, right? So from this meeting, FOMC, December 16th, we come down to the January 27th meeting. And then from the meeting from the 17th to today or yesterday, we've come down again. So we've had a return of minus 25% and minus 20%. So huge drawdowns from those two meetings. Why is there an incredible amount of signal in this? You can see that near these FOMC meeting dates, it has a lot of confluence with calling the tops or bottoms on risk assets, which makes sense because it's the market digesting the information from the Fed on a macroeconomic perspective, and then it allows investors to reposition and readjust for what they believe is going to happen next. So if you look here, this was the top, right? This FOMC meeting was literally the top on Ethereum on November 1st, 21. This one calls almost the near, the Pico top. Right, this one calls nearly the Pico low, right? Over here, same thing. Meeting calls basically the Pico low. High, low, 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 high. Like, you see what I'm saying? These things call them fantastically. So here, same thing, right? This meeting called the local low. These meetings calling these local lows, right? You get to this meeting on December, this called effectively the local top, right? So this is basically whenever we topped out on altcoins, the beginning, middle of December. And then as soon as this meeting happened, boom, huge fucking nuke. Okay? This meeting happens, huge nuke. Boom. Okay? So when I'm looking at this chart and I'm saying, okay, first of all, what are the chances that we make it to the next FOMC meeting on May 5th and we draw down a third cycle in a row? So 1, 2, red. What are the chances that we get a third red in a row? The only time we've ever had 3 red in a row was in a bear market. It's the only time it's ever happened. So in a complete bear market reaccumulation. Do I believe we're in a bear market and we're going to start reaccumulating? No, I don't. So do I believe we get a third meeting in a row where we have a lower price on this date for Ethereum than what we did over here? No, I don't believe that. Even if it happened and we make it to May and we're at a little bit lower price on Ethereum, I don't believe that's going to happen. But even if it does, you're going to be barely any lower, and it'll be a 2 or 3%, 5% lower from where we're at here, which is good because then that means you had all this time to reaccumulate before you start getting these greens again moving back up in here. Okay. So my guess though is that this bar is going to be a green bar here. I don't see 3 reds coming in a row. So that's good. This means that this FOMC meeting did what? Called a local bottom, a local low. This is why I'm bidding. Okay. You see this go green. I see maybe one more green up until June 16th. That's looking like a good top signal. Probably that June 15th meeting. Why is that going to be a good topping signal locally? Typically the summer times are bad for crypto. The second thing would be at this point, June has like a 62%. We were just looking at the Fed watch tool. It has about a 62, 65% chance that we're getting a rate cut on that meeting. By the time we get closer to that date, it's going to be a 100% chance that we get a cut on that meeting if we didn't already get the cut and front ran it on May 12th, the next one. So what's going to happen if the percentage chance of us getting a rate cut on June 16th becomes much, much higher? You're going to see the market will front run that and price it in beforehand because the statistics are already out. The chances of getting a cut is going to be out already. So they're going to front run it. So when they're front running this June 16th meeting in that rate cut, you're going to see risk assets in here pumping into this meeting. And then after the announcement happens, probably get a red bar into the summertime, right? And then back up. You see? So I'm looking at this as another point of confluence, again, of how things are lining up nicely for this eventual move. That's how you make fucking money in markets. You look for what the potential move is coming next, not what's happening right this second. If you were able to call this short squeeze, this big move down on risk assets, and you've been riding shorts all the way down, beautiful. You anticipated the move before it happened. Now we're at the bottom. Now you're not going to be printing on shorts. Now is not the time to be positioning short. Now is the time to be positioning long. As soon as you see the macro indicators showing that we should have another leg up, which I'm seeing, you position now for that eventual move. The move takes place, you take profits, you rotate out. Okay, so that's what I'm seeing right now. I'm calling basically this should be a local bottom, or should be the local bottom on this indicator. If I don't see a third bar coming in red, I don't. So I'm expecting we end up higher in ETH prices from here to May 5th, and then the same thing again to June. Okay, got it. All right, gentlemen, let's see how many live viewers we got. Oh yeah, we're fucking cooking. Over 20 plus again. Beautiful. All right. But that's a great indicator. I like this. So that's the FOMC meeting tracker. You got all the dates over here, percent returns, and it shows you on the chart. Okay, so let's get this out of here. All right, let's take a look at. There was another one I wanted to take a look at. Liquidity, what are we talking about here? If we look at the RSI real quick. This is the only thing that I'm still looking at, just so you guys understand, that tells me there still could be potential drawdown. Let's see where Harry's at. Hold on. Let's see what he said. Damn, he's still on with AOC. Damn, AOC's gone to jail. Woo! All right, Harry, go save her. All right. Logan should be back on Monday. He'll be back. So I know our viewership will probably tank on Monday once he's back, but I mean, we're gonna ride with him. That's brotherhood, right? I'm not gonna allow him not to be on these streams. Okay. Here's the only thing I'm looking at on ETH that makes me a bit wary that the Pico low may not already be in. Even though we tagged our demand fucking perfectly, called it perfectly. Whoops. Is the fact that we just didn't really get a full capitulation on the RSI. So for example, we got this capitulation in June. This was the FTX nuke. And we got this actual entering of the oversold territory. Okay. Now, to be fair, we didn't do it here, and we still managed to get severely overbought, which called this top. Okay. But we never got that true oversold capitulation on the weekly. We also did not actually get it on the daily. Because you see this one right here, right? On this August 5th nuke, we got the true oversold territory. This portion right here, like we were talking about. This one right here. This was true oversold. On the daily, though, this area that we had drawn out earlier did come into the oversold, as opposed to the weekly, it did not. So that's good. But you still saw the capitulation. So capitulation here. Capitulation here. Right? On this nuke right here. Okay. Oversold. Overbought. Okay. Then on the August 5th nuke, again, we get the oversold. Here it is right here. We still did not get it on the daily. On either of these. This one was here. This one was here. Okay. I'm not super pleased with that. Is it possible that we just don't actually get this? It is possible. I mean, that's the thing. If we spend enough time around here without completely getting back into this demand again, then yeah, it just didn't happen. That's the only thing that tells me there is possibility that there is more downside on ETH. Now, is it going to be a lot? Fuck no, it's not going to be a ton. I mean, it'll be down into 1700, maybe 1650, 1600 range, right? Is it going to hurt? Is it going to look bad in your portfolio? Yeah, for sure. Maybe in here, and that's the low. But that would be the only thing I would tell you guys to be wary of. Where the fuck did my indicator go? That would be the only thing I would be wary of on ETH, is that we didn't get that true oversold capitulation on it. So just be wary, okay? Because we still could come down a little bit lower. But like I said, overall, there's not much more downside to be had. There just isn't. There's not. What else are you looking for? There's nothing else. Okay. All right, ladies and gentlemen, that's all I got for you. Okay, I'll give you the fucking game. There's nothing much else I can really do for you other than just give you the fucking juice. Show you guys how to make money on a long time frame. Again, a reminder to everybody. I say this, and I'm going to continue to say it. You do not invest. You do not build wealth. You do not use crypto as an avenue to be able to pay your fucking bills. Okay? It's not supposed to be an income. I'm showing you guys how to generate wealth and generate multiples on your money so you can have a meaningful return on your investment in a relatively short period of time, as opposed to just sticking your money into the fucking stock market, S&P, and try to get 10% a year on your, $10,000. It doesn't fucking work like that. On your 100 grand, 10% doesn't fucking work like that. You have 100 grand in the stock market and you're going to make 10% on it a year. So you're going to make 10 grand a year and you're going to be happy about that? Fuck no. That's not shit. Okay, especially after inflation, you're not making any money. So if you got big fucking balls of steel, you're going to throw your money into some risk assets that are going to perform correlated to these markets, except get a much larger return, like the Boys Club, and get a 10x, a 15x, a 20x on your money and make something significant of your capital. Okay? Warren Buffett, he can throw his money into fucking T-bills. You can't. You can't. Okay? So my point is you need to have an income generating you money 24/7 outside of markets so you can stomach the volatility and not capitulate at the lows and get butthurt because your portfolio went down because you're expecting everything to be up only 24/7. That's not how it works. You need to put money into the market that you are fully comfortable never seeing again, that you don't need to pay your fucking rent. That's not how you invest. Now you're gambling. Now you're hoping and praying that you can turn your grand into 10 grand in a couple of weeks and then pull it out of the market and pay your rent with it. Doesn't work like that. You invest like that, you're going to be mentally distraught. You're going to be exiting the markets much too early. You're going to miss the majority of the moves because you can't have any type of patience when you're expecting these things to pay your bills. So if you're looking for a better income, if you're looking for a way to make a bunch of money, not only in crypto, but outside of crypto, real cash, real fucking fiat. Let's do live scene. Join the Taylor's Code. Okay, I made 20 grand in the last week just from my insurance business. Over 20 grand USD. So do you think I care about fucking... First of all, do you think I care about the price of eggs? No, I don't care about the price of eggs being $4 or $2.50. It doesn't fucking matter to me. It's free. But I have money coming in from businesses. I know how to make money. I don't need to look at my crypto portfolio and say, how am I going to pay my rent? It's not an issue for me. Okay? And that's what we teach inside of the Taylor's Code. The Taylor's Code is a network and a fraternity for the ultimate professional, for people to be able to come in, network with people who are making money, network with people who are in the markets, and actually put yourself in a position to win on a long enough time frame, because you have a team of people who, like myself, understand what's going on in markets, can teach you, can show you what I'm doing inside of our private Discord, when I'm buying, when I'm selling assets, what assets I'm accumulating at what times, things that I'm not talking about on YouTube. And you can actually, number one, grow your money over a long enough time frame within the Discord. But on top of that, you can also build an income in there. You can learn how to build an e-commerce store and generate income from that. You want to get into the sales industry and you want to make money in the insurance industry the way that I do? Join the Discord. I'll show you how to do that, right? The market drawing down does not affect me because I still have hundreds of thousands of dollars over the course of a couple months coming into my bank account, so I can either buy more assets, go pay my bills. It doesn't affect me. So my mind stays strong because I'm not looking at my portfolio thinking, where's my money at? Do you understand? So you have to have an income. You have to build a business. You have to have money coming in so you're independent of what's going on in the markets. Then mentally, you can perform better. Mentally, you can trade better because your bills are not dependent on whether or not your trades play out. So it gives you patience. It gives you confidence. It gives you the ability to allow your longer term swing trades to play out without being devastated out of local drawdown for the last couple of months. Do you understand? So if you want to join the Discord and be a part of the network with the hundreds of other people that we have inside the organization, then join today. Just for March, only for March, we have a discount code for $40 off of your first month. March 31st, code expires. Can't use it anymore past March. So here's your opportunity. So I'm going to share my screen. Let me do a little Mr. Producer. Got all them hoes. Okay, the Taylor's Code. You come to the taylorscode.com. You want to be just a part of the network, a part of the Discord, get access to crypto information, e-commerce, fitness. Join the professional, okay? First month will be $10. That's what you spend at fucking McDonald's, okay? How about you spend it on something that can actually make you money? $10 for your first month. The gentleman, Okay, this is for the people that are strictly looking for the private crypto plays, want to make money in crypto, the assets I'm accumulating, when I'm buying, when I'm selling, personal analysis on your portfolio. I'll teach you how to do TA, etc. All those sorts of things. You want to join the network for the gentlemen so you can get access to this portion of the Discord. You click on the Stripe link. Remember, code TC444. Okay, Taylor's code 444. You apply $40 off your first month. So this one would be what, $50? Okay, $49. Join the Discord. We're gonna get you inside. We'll get you making money ASAP. Let me know what you want to do whenever you get inside, and then outside of that, ladies and gentlemen, that's all I have for you. Okay, questions, comments, concerns. Giving you the game. There's nothing much else I can really do for you. Okay. I want you guys to win. I want you guys to make money. I want my network to be powerful, strong, driving supercars. We're going to do a first rally, TC car rally, locally here in Pittsburgh. We got some gentlemen bringing the C63 AMG. I got the GT Banger. We got the S-Class pulling up. We got Logan's fucking army truck, etc. Pulling up like fucking savages, professionals, right? That's the part of the network I want to be around. I don't want people pulling up in a fucking Prius. I won't let you come if you're coming in a Prius. So if you join the network, it's in my interest to make sure that you make money because I'm going to have to do business with you. I want to do business with you. I want to make money with you. So that's the part of group you want to be around. You want to be around people who are trying to make money, people who are successful. That's the whole fucking point, okay? So you're not going to be doing supercar rallies with your buddy at the fucking, office doing graphic design, making $30,000 a year. That's not who we're fucking with. Okay, the people inside the Taylor's Code are valid, legit. All right, ladies and gentlemen, outside of that, we'll see you inside the Discord. We'll see you at the car meets, and we'll see you in the markets making some fucking money. All right? Let me do a little. Mr. Producer, we got all them hoes.